Hello everyone and welcome back to xm.com. It's almost the end of the week, but we are also approaching the end of May's trading session, so another round of volatility is likely as investors are eagerly wait for the US to report the Fed's favorite core PCE inflation index this Friday. At the same day, the Eurozone will publish its latest flash CPI inflation figures. While WTI oil futures might also attract attention early next week, as OPEC Plus members are scheduled to meet this Sunday to discuss production levels for the rest of the year. So for this session, I have decided to share my analysis on pound dollar, euro yen, and WTI oil futures, and starting first with pound dollar. We can see that the pair faced a strong bearish action yesterday, creating this bearish dragonfly candlestick pattern, which could be a sign of a bearish reversal. We can see that both the RSI and the stochastic oscillators have peaked in the overbought region and are trending down now. So there is risk for more weakness in the market. The encouraging thing here is that the pair is still trading within this bullish formation, within this bullish channel, and is currently it found support near this important resistance trend line from May 2021 earlier today. So that keeps some optimism for an upside correction. However, if that doesn't happen, if the price breaks this trend line at 1.2678 and also closes below this bullish channel at and beneath the 1.2650, where the 20-day exponential moving average is located, then we may see more weakness, probably towards the 1.2570 and 1.2598 region, where this resistance, former resistance line, the 200-day moving average, as well as the 50% Fibonacci retracement of this down leg are all located here. Now, if the price manages to rebound, we may see another battle near the 1.2770 mark. This is the 78.6% Fibonacci mark, which the price could successfully claim this week. The 1.28 level will be also closely watched in this case, where this is where the price peaked earlier this week. And a break above that could potentially take us up to the upper band of this bullish channel, seen at 1.2855. Higher than that, the 8-month high of 1.2892 registered back in March could come into view. If the price successfully overcomes that area, then this up leg could stretch towards the 1.30 to 1.3020 region to meet the support trend line coming from the pandemic low. Now turning to euro yen, while technical signals are kind of discouraging here as well, as after the price failed to overcome the 170.78 resistance for the second day. We can see that the price is faced more bearish actions today, and given that the RSI and the stochastic oscillators have already turned to the downside, that could be a sign that the weakness in the price could persist. However, if this former resistance trend line holds at 168.85 and the 20-day moving average also manages to support the market, then the price could see another test near the 170.78 level, a break of which could take us as high as 173.83 if the 40-year high of 171.56 gives way as well. Otherwise, failure to pivot near the 168.85 level could pressure the price down to the 167.20 level, which coincides with the 23.6% Fibonacci mark of this up leg. Lower than that, the 50-day moving average of 166.30 could be another interesting area to watch ahead. Well, before we head towards the lower band of this former bullish channel, seen at 164.82 the 164 round level could be also another interesting region, since this is where the 38.2% Fibonacci mark is located. Then finally, looking at WTI oil futures, well, the price could sustain gains above the 200-day moving average yesterday at 79.65 and instead closed lower. It's currently testing the 50-day moving average near 78.95. And judging from the technical indicators down here, well, there is little optimism for a rebound, given that the RSI seems to be struggling to hold above its 50 neutral mark, and the stochastic oscillator is near its 80 overbought level. Nevertheless, the 20-day moving average and the upper band of this broken bearish channel could still support the market near 78.35. If that region manages to push the price higher and above the 200-day moving average, then the price could target the 81.50 trend line zone and the 23.6% Fibonacci level of this up leg at 82.40. Successful penetration higher could then drives us towards the critical 84.35 territory, where this long-term resistance line coming from the peak, coming from the 2022 peak is located. Now, if the price if the weakness of the price continues, with the price falling back into this bearish channel, immediate support could come near the 77.10 and 77.42 region, and near the 50% Fibonacci mark. Failure to rebound here could see a sharp decline towards the 61.8% Fibonacci of 75.20, while lower this downtrend could strengthen towards the 72 number, since there are no support levels before that territory. So that's all for this week's important markets. Thank you for watching, and see you next week. Bye bye for now.